Greetings, greetings, greetings. You are now tuned into the vault. Trust Christian, know nothing, control everything. Just want to thank everybody for tuning in live, listening to replay. Always appreciate everybody that tunes in live, listening to replay. Always appreciate all of our longtime listeners, everybody that listens in that's new. We actually sit in front of new subscribers all the time to the channel. People do subscribe that we deal with face to face. And we appreciate everybody that subscribes and likes the channel that we've never met. We've never met you face to face. If you've never come to a workshop that the Vault holds privately, we always appreciate everybody that does that. If you would like to find out, on the email list, feel free to reach out, Christian at trustchristian.com. If you're looking to, engage with the Vault, Christian at trustchristian.com. Once again, that's Christian at trustchristian.com. For trustee training, that we provide at the Vault or consultations, feel free to reach out, Christian at trustchristian.com. We got a bunch of consultations this week, actually dealing with a bunch of people. A bunch of good emails came in from the past few episodes. So this is the Vault, episode 330, family slash group real estate investing equals REIT, R-E-I-T, real estate investment trust. So family slash group real estate investing equals a REIT. This is a very important episode about a bunch of families, bunch of entrepreneurs, bunch of investors that they literally, uh, they have they want to do projects with their family. They want to do projects with their friends, and a lot of times they may not want to do it in an LLC. It's a public entity. When we even talk about doing it in a real estate situation, a lot of families, a lot of friends want to do business together in real estate, and they don't know the structure that they should be doing it in. Structure meaning a business entity. So this episode is not intended to be financial advice and not legal advice. We talk to everyone at the Vault, and we talk to them and let them know, these are the conversations that you're most likely going to be having with your lawyer or team of lawyers or team of accountants, and just talking to them about these structures, particularly when we talk about REITs, real estate investment trusts, because they do allow people to get paid evenly. It does allow people not to own the company necessarily. Even in a situation of a REIT, the owners are not necessarily the beneficiaries, even though they call them beneficial owners. Usually, you see the beneficiaries just receive the disbursements from the property, the increase of the value of the property, or the cash flow from the property. Whatever the dividend structure is going to be for the initial investment. It's really good to families and real estate investing and as well groups because it brings a level of structure. It brings a level of organization that the families or the group may or may not had in a traditional LLC or C corp. Uh, Meaning that the structure and trust, is that it's only really two positions that they're going to take. Are they going to be the company members, the trust members that are going out and being acquiring properties or acquiring the cash flow, raising the capital? Because there's two different people in real estate investment trust. There are investors who give the money and they're shareholders. And then there are the people that are the trustees that are managing the money, going out, finding the deals, and looking to do so. So when you see a lot of families and a lot of groups that want to work together, people have to know what they bring to the table. Some people just bring money to the table. Some people bring signature credit to the table, even though in a real estate investment trust, you don't need signature credit. But we are talking about people that bring experience to the table. Some people may have a lot of transaction history or in their real estate deals because they have a lot of transaction history and they do have cash flow and they do have capital. They're willing to sell that transaction history to the trust. That means that they're on the board as a board member. They may not be an investor, but they may be a board member. So when you look at investing in real estate with a group or with your family, you're talking about it from the perspective of there being actual roles. What does it look like? It looks like you having a secretary. What does it look like? It looks like you having a treasurer. What does it look like? It looks like you having a senior board or a senior trustee board. It may even be more than one board. It may be an active business management board, and it may be a voting board. A voting board, all they do is vote. So we could talk about it at many different levels, but we're going to still talk at the base level. Base level meaning, hey, I got my wife and I got two or three or four kids. and I got some other families in the neighborhood, and we want to start acquiring the properties. We want to start acquiring properties. I got friends, and I want to start acquiring properties, but we don't want to just do it through a LLC. Why? Because when you're in a REIT, you can actually take a REIT public. If the REIT was originally private, because there are private and there are public REITs, but a private REIT can go public, so it can acquire a certain number of holdings, and then they can go IPO, and the original investors are now Class A investors, whereas after IPO, which is initial public offering, now we're talking about going to Class B shares. Now we're talking about your shares doubling. Now we're talking about whatever shares and disbursements you were getting. Now they're going to be issued a stock split. And now you got money coming into the company from new investors. The real estate investment trust is able to go out and do bigger projects because they have more capital from the initial investors. See, everybody says they bring something to the table, but you got to know what you're bringing to the table. You got to know what the group's bringing to the table. You have to know what the vision is. Is the and this is how you know people don't know trust, people don't know business, because when you're in any business environment, just like everybody had to deal with what's called a mandate, you have a mandate in trust. What is the mandate? You can look up, this is a financial term. See, mandate isn't mandatory, or is it? It's a financial term. So, mandate. What is the mandate for the trust? What is the trust indenture for the trust? What is the charter for the trust? That's what the friends and family really want to sit down first. Let's hash out the vision, because the vision and the purpose is not the process. The process of obtaining wealth, the process of growing business in a different position, proper position, comes from the vehicle or the process. That's it. The vehicle and the process are the same exact thing. That's a REIT. That's a LLC. That's a C Corp. Those are process. Let's talk about the purpose. Purpose meaning, do you guys have a charter for the trust? Well, no, Trust Christian, me and my family and friends, we didn't really want to hash that out. We've been taking a little bit of time. We ain't really figured it out yet. Well, if you don't figure that out, who's going to be the manager of the money? Who's going to be able to be signed on to the account? When people are in these type of situations, you think you don't have to sign a non-disclosure agreement? You think all parties involved don't have to sign a non-disclosure agreement? Everybody involved has to sign a non-disclosure agreement. Everybody. Lawyers, accountants, board members. It's a real estate investment trust. Whether it's public or private, let's make sure we're doing it properly. So by that being the case, yes, non-disclosure agreements are going to go out. Not only that, whether I know it or not, traditionally, when you even go look at traditional banking companies, when you go look at insurance companies, when you even go look at real estate investment trust on the public side, they have to let you know what their mandate is. What are they investing in? The benefit of the private is that you don't have to do that. You don't have to disclose those things. On the public side, it's beneficial to disclose it. Why? Because let's just say you have a local family yourself, nuclear family, and we're talking about you possibly partnering up with other friends, other family. By you partnering up with other friends, other family, you're going to have documents in place. You have agreements. Everybody's supposed to have a copy of it. So now everybody knows what they're looking at. We're looking at pay schedules now. No one needs to question when the pay schedule is. If you're doing quarterly dividends, if you're doing monthly dividends. See, the best part about private real estate investment trust investing is that those type of thought processes are flexible and they're private. Whereas on the public side, those things have to be disclosed to the public. Everybody involved has to know in the public. Whereas on the private side, those things don't have to be disclosed. What the assets of the trust are holding don't have to be disclosed. Whereas on the public side, you know that it has to be disclosed. It definitely has to be disclosed. You have to state what the mandate is. You have to state what the charter is to each new member that becomes a part of it. The benefit of you all being Class A shares and Class B shares is the difference between you doubling, quadrupling, 10xing your money as an initial investor. See, when you come together as a group of 3 to 4 or 5 families that put all of your properties in one trust, now you have real estate equity. You have equity. You have a bigger portfolio. If you want to work together, people in trust deal with people in trust. You deal with it in equity. The families, the groups, the friends, whoever, they're going to put equity together. Not only are they going to put money and capital together, not only are they going to put together legal title, they're going to put equity together. Not a new funds, old money. You know how they always say everybody should be operating off old money? This is an old money thought process. Why not work off the old equity that we have in each other's properties? Why not work together and leverage, keyword leverage, leverage each other's talents, leverage each other's financial situation, leverage each other's past transaction history. See, these are the things that are ephemeral. These are the things that are intangible. That in the business world, people say, well, I want to work with people, but I don't trust them. One, you got to be in trust because then people in trust deal with people in trust. The contract is clear. No one owns the business. You're equal shareholders. Some people may have more shares, but they're getting the same dividend percentage because the percentage is the same. You got to have good money managers around you. You got to have somebody that you can trust in the group with the money that can sign onto the account that won't go embezzle the funds. They won't go use the funds because they need to go buy a new car because their car is messed up. You got to find people in the group that are not going to go try to buy something else because they're going through hard times, or pay their rent because they're going through hard times, or pay their mortgage because they're going through hard times. It's trust. It's business. You trust these people. You got to make those sacrifices as a trustee if you're going to do that. As a beneficiary in a group situation, you only get the benefit of of being able to get disbursements. So some people will say, "Why trust Christian? If we're going to do this, should we be the trustees or the beneficiaries?" Let's say it again. Should we be the trustees or should we be the beneficiary? Because we can't all start the trust. It only takes one grantor, so we only need one of those people. But we're not gonna talk about the grantor tonight because we have a proprietary process at the vault, and we don't want to talk about that position tonight. Today, we're only gonna talk about, are you gonna be the manager of the portfolio, or are you just gonna be the beneficiary of the portfolio of the real estate investment trust from the group or the family that is doing real estate investing? Are you going to be a beneficiary? Beneficiary means you're taxable. Well, what about the trustee? Can I take a salary as a trustee? I am managing the money. You could also be managing the property as a property manager. That's yielding people money, whether it's a multi-unit property or otherwise. So when we talk about these benefits and perks of being a trustee, the benefit and perk of being a trustee is that you don't own anything. You just control the real estate. You control voting. You control money. You control hard equitable assets. You don't own them, remember, you just control them. You don't own them, no. So how does that translate over to, I'm going to have a better life, Trust Christian? Because I needed to make it sound like I have a better life. Like I need to have a better life, period. Okay. Well, how's a better life not helping other people out? The golden rule is, if you help enough people get what they want, you'll automatically have what you want. That's what we follow at the vault. You got to help enough people get what they want. There are people that want to create strong income sources and generational wealth for their family. And real estate is one of those areas that they feel if they hold real estate, then they want to get a dividend back to their families. Sometimes the dividends are monthly, not all the time. Usually it's more quarterly. Sometimes they could be biannually. Sometimes they could be yearly. You just have to know how to structure it. Some people say, well, how do we structure it in the beginning? That's something that when we talk about the charter and the mandate, it's in the charter and the mandate. Your group can come up with, well, where are we going to, how when are we going to do disbursements, or dividends? Do we have the option not to do them? Do we have the option to do them? People say, well, that's a lot of detail. How do I get around knowing all of this detail? Well, one of the things you can do is you can go to the local law library and get contracts for what we're talking about for REITs, because they have contracts for public REITs. And by you being able to look at these contracts, you can get a good idea of what it is that you're doing. This is just a thing of called measuring 20 times, cut once. That's all it is. It's just doing things properly in the beginning so you don't have to go back. So when people say, well, I don't know what a charter looks like, I don't know what a mandate looks like, you can either Google it through the internet, through search, or you can go to the local law library and they'll definitely have a contract there that you can print out, feel comfortable with. And still, as well, you all can go Google real estate investment trusts that are, a lot of times you'll see things called ETFs. We wouldn't really steer you in that direction. Stick to what's actually a REIT, a real estate investment trust portfolio, or a real estate investment trust company, because they are allowing people to buy shares, buy and hold, and sit on the dividend. Whereas um, in other positions, you may not. And once again, as a trustee, you're managing the property. Some people say, well, can I be the trustee and the beneficiary? Because it's a group project, it actually takes away the fact that you're not the sole trustee and the sole beneficiary anymore. So it doesn't deal with the doctrine of merger. Doctrine of merger usually deals when you're the sole trustee and sole beneficiary. So that's why when we get on the phone and consultations and trustees say, well, I got to trust. First thing in your whole speech that you messed up was you got to trust. But if you want to work around that statement, that's fine. We still talk to trustees and say, well, if, or people that are contacting them and say, well, I have a trust. Well, if you have a trust, that means you created it. So did you create the trust? Are you the trustee still if you created it? So when we talk about, not talking about the grantor tonight, we're talking about trustees and beneficiary. So if somebody says, hey, I want to start this with my friends and family, a group in real estate investing, I want to make sure that I can benefit too. Remember, the beneficiary doesn't have to be you. It could be a company. It's a person, remember? So when we talk about beneficiaryship, or we follow any elite principle, own nothing, control everything. Trust Christian, own nothing, control everything. So what we're talking about is the fact that money can go to a company, money can go to a charity, money can go to many different places. And we're not talking about moving around in any type of nefarious way or anything like that. We're talking about specifically when the disbursements or the distributions or the dividends are paid out from the actual REIT. They have to go somewhere, and if they're either going to go to your name or they're going to go to a company name. And that's really, really important. Maybe you got set up inside of your REIT where you don't even have to take a disbursement. Have to take a disbursement. Have to take a disbursement. You don't have to take a disbursement. You guys can option out and say, you know what, whatever dividends or disbursements I was going to receive as a beneficiary, I just want to reinvest it back into the trust. Reinvest it back into the trust. So a lot of times you see money that's put back into the trust to go do further real estate investment projects, and in turn create a bigger dividend yield over a quarterly process. How you set the contract up for distributions, how you set up the contract for the type of properties that the trust has to acquire, whether they're going to do single family, whether they're going to do multi-unit, whether they're going to, specific neighborhoods, specific countries, all these things, to even allow it to go into other countries. These are things that you're going to be focused on as a trustee. You're also going to be focused on voting rights. Because when you guys look at any type of real estate investment trust, there are voting rights. Are voting rights even given to the beneficiaries? You guys are accepting friends and family, but they may not be the trustee. They may just be the beneficiary. So do the beneficiaries have voting rights? In our system, dealing with trustees that come through the vault, beneficiaries never have any rights. They just receive a distribution if the trustee can give it to them. So you start seeing situations like that where is the distribution mandatory? Because if it's not, then it can be reinvested back into the REIT. And these are legal things that you'll go over. Another thing is just making sure that your team is staying compliant. We get a lot of trustees ask us this type of question all the time. Like, let's just say that you are a trustee and your children are not of age. So how do you find somebody to come in and take over and manage the trust for the family estate if there's no if they're not of age, the children aren't of age? So we talk to our trustees like, look, you're gonna have to find somebody possibly that's competent to do so. So when you talk about it in a REIT, you can find that person. That person sometimes can be called a protector. They can be called many different things, but we'll just say it's a protector in this particular case. They're protecting the interests of the trust, so they usually have a specific right. They have a little small excerpt in the trust document that states that they can forcefully sit in a meeting. They can't make any votes, they can't do any of that, but they have to forcefully sit in, and they can make sure that the trustees are being held to the fire with the entities. They're probably one of few people that can sue the trustees for not doing their job. A protector. You say, wow, outside third party person. But remember, this is a person that was hand selected just to do that. They weren't doing it to be malicious. They're only doing it because somebody's not doing their job. So when you're selecting a protector to protect the assets of the trust in case you go out, in case other trustees go out, and having somebody be there for the beneficiaries or the successors, you can see that those people are going to benefit from having someone like that in place. Someone's going to, people, the beneficiaries are going to benefit from having a protector in place, because the protector is just an overseer. They're not, once again, they're not always a decision maker. They're not anything that has to do with anything other than just looking at the trustee saying, hey, I got the trust document too, because the beneficiaries don't always have the trust document. The beneficiaries don't always have the charter. The beneficiaries don't always have the mandate. The trustees usually do. So when you look at it from that perspective, they don't always have it. The protector is there to make sure that the contract is not being violated by the trustees, that they're not stealing, that they're not commingling funds, that they're not fraudulently transferring anything. These are things that where you're gonna see it. You're gonna that the what is that the protector is going to be able to implement that strategy. So appreciate Mississippi for tuning in live, listening to replay. Always appreciate Mississippi for tuning in live, listening to replay. Feel free to type into the chat where you're listening live or listening to replay from. This is the Vault episode 330, family/group real estate investing REIT, R.E.I.T, real estate investment trust, because people in trust deal with people in trust. So trust, Christian, own nothing, control everything. Always want to appreciate everybody who's tuning in live, and as well people that listen in the replay. Feel free to type into the chat where you're listening. Feel free to hit that like button. Hit the subscribe if you haven't subscribed, because this is the content that we bring our trustees. We obviously bring it in a more in-depth way. Appreciate Carrollton, Ohio for tuning in live, listening to replay. Always appreciate Carrollton, Ohio for tuning in live, listening to replay. Once again, if you're looking to do group projects, you got to do it through the correct structure. How can you invest in an entity, whether it's an LLC or a trust or a C corp, if people aren't willing to do business in a proper fashion? Why are all of us doing business in our name? Why do all of us hold houses in our name? You know how many people hold houses in their name and they're supposed to be investment properties? How is it an investment property and you got the property in your name? That's the bottom line, ladies and gentlemen. You gotta have the property in the correct position so the group can benefit. Because there are people that have skills, talents, abilities, transaction history that the group can benefit from. They may not even be a person that has the transaction history doesn't even always have the money, but they have the experience. So that means that now when banks are looking at these people, when they're looking at, oh, who are we gonna lend money to? The first time investor, or are we gonna lend it to a company, a real estate investment trust that has 4 board members with 25 years of real estate experience? Or we're going to go deal with a real estate investment trust that has over 50 years of business experience with 4 different members or 5 different members. These are the things that you're looking at. Having real estate in your name is called real estate experience, period. The bank didn't ask you if you couldn't make the payments. They can see that you made the payments. They can see you made the payments on time. That's called the real estate investor history. You're buying the property from them. It's an investment, because once you have it, it's an asset. So once again, the bank, people try to say, oh, the bank's not going to give a real estate company any money. The banks aren't going to give anybody just money for real estate. They're not. They're going to give a family that has experience, a group that has experience that they can put on the books for why they need the money, not a first-time investor. It's very challenging as a first-time investor because they want you to have the money. Well, if you don't have the money, transactional history can, not to say it replaces that. We're not giving financial advice, we're not giving legal advice. It's not that transactional history will replace it. Transactional history gives them leverage to go deal with somebody that has the money. Because obviously the transactional history person, they know how to find a deal. They know how to finish a deal. They've done it more than one time successfully. So you think you're smarter than the bank? The bank already sees that because they put it on paper. The bank is going to verify that. And once they verify that, the bank's not asking them for money. The bank is asking for them to go out, find properties, take a loan out, and pay the mortgage back over 30 years. That's what the bank's asking. Can the bank trust you with debt? But they don't need to trust one person. The bank actually likes trusting a group of people. But how many people are going to get out of their way, get out of their egos? See, this is the reason why people don't do these group projects. It's because of ego. So how do you get around that? You got to do it in trust because people in trust deal with people in trust. Or you deal with people that, once again, families and groups. And they do it in a manner in which we come to an agreement, which is a contract, which is a trust. Let's say that again. You come to an agreement. And he say, well, we don't know everything we need to put in a contract, Trust Christian. You are a leader at the table. If you're a trustee, you're a leader. Whether you're the secretary, whether you're the treasurer, whether you're the CFO, whether you're a CEO, whether you're the senior board member trustee, you are a leader. You have to go out, get the contract as an example. You're listening to the vault because you're a leader. So you're to set the example. You can't say, well, I'm waiting for my mother to get the contract. I'm waiting for my dad to get the contract. Well, I talked to my cousin about it and they didn't get the contract yet. They didn't go to the law library and get the contract yet. You got to get the example contract. You got to go to a lawyer and pay a lawyer for a R.E.I.T contract sample or previous R.E.I.T contracts that they've done. And I need you to block out the name of the people. How expensive could that be? You got to go find it out. You got to go find out how much it costs to actually get a sample R.E.I.T contract. They're on the internet, but we won't say that you should get them off the internet. We don't trust the internet that much. You want to go get it from a legal person in your local area. You're going to go get a R.E.I.T contract from someone in your local area. Can the vault provide that? Yes. If you contact the vault, we can work with you all on the R.E.I.T contract, especially private. But when we talk about it in the public, you're usually looking at a public lawyer. But we also gave you the shortcut of all shortcuts. You don't have to spend the money on a lawyer right away. You can go get the R.E.I.T contract from the law library. I promise you. It's at the law library. But oh no, Trust Christian, I got to go in. I got to take time out of my day. I got to go ask the law librarian. Where's the R.E.I.T contracts at? Where are the real estate contracts at? In the law library. The templates for the contracts. The templates to do group real estate investing. The templates for family real estate investing. Those contracts are at the law library. Oh man, Trust Christian, I got to be the first. You got to be a leader. You got to bring everything to the table. Just like everybody else has got to bring everything to the table. We got to bring something to the table. The secretary is bringing good listening skills and accounting. You got to have accountants. You got to have lawyers. You got to have these people. These people have to have skill sets. But if you're the senior generalist, what's wrong with going and getting a document? We're doing a real estate investment course over at the Vault. Feel free to reach out. Christian@trustchristian.com. It's a R.E.I.T to learn how to manage these things with your group, with your family. We've done training for families for years. We've done trainings for groups for years to do real estate investment trusts, period. A lot of people say, oh, we want to do it with our family. So who's going to step out and who's going to get in trust? Who's going to step out? Who's going to get in LLC? Who's going to step out? Who's going to get in court? So when our partners come to the table, when our investors come to the table, they can appreciate the structure that's in place. They can appreciate the organization that we have. They can appreciate the documentation that we have. They can appreciate the planning that we have in place. That's it. That's it. Are you going to put these things in place? If you're going to put these things in place, you should have no problem with a R.E.I.T. Contact Christian at trustchristian.com. Once again, that's Christian@trustchristian.com. You guys can do consultations with your family that's looking at going to real estate. You can do consultations for your family that not only just going into real estate, but they're doing it in R.E.I.Ts. Not only that, are they doing it in LLCs? Not only that, are they doing it in corps? You can get the group consultations for your family. If you say, hey, we have our family, we all got properties. Each of us owns a house, each brother, each sister. But when we say own it, y'all know what we say at the vault. They got a mortgage on it. That's what they do. So how do we take those properties and make sure that those properties can be in one place to go out and leverage us into a position where we can bring wives home from having to work jobs, where we can bring husbands to home to where they can still work with their families and be more closer and home with their families because they have real estate going on. That's bringing in cash flow. That doesn't mean that they have to leave the house to make capital. This is what you can reach out to the vault for. If you got friends, hey man, I'm trying to do this with my friends. I'm trying to do this with a large group. People say, well, how big can a group be? Can it be 3, 4, 5? Can it be 25, 50? Ladies and gentlemen, real estate investment trusts have thousands of members. They have thousands of shareholders. They have hundreds of shareholders. Remember, are you going to be the trustees going out and acquiring the properties or contracting out to find properties and managing the money as asset managers for the beneficiaries? Because a trustee's job is to manage the trust assets for the benefit of the beneficiary. But are you a beneficiary or are you just trustee? Because if you're trustee, you have a responsibility. If you're a beneficiary, they're just waiting for distributions. Period. Are you going to be the position that's just waiting for a distribution and don't have a choice? And then remember, those people that can get in that position, see, as a trustee, you guys can regulate how much our equity are we going to give away in this company. LLC wise, C Corp wise, trust wise. How much are we going to give away? How much is a share going to be worth? Say we do 100 shares for $10,000 each. Say we do 100 shares for $1,000 each. Remember, you determine that as the initial board of trustees, as the initial board. You determine that. You got to determine that. You got to figure that out. And remember, most of the time, a lot of people say, well, I don't know how to get around. What do we have an issue, Trust Christian? You want to create a quorum. A quorum is an odd number of members. So you got 3 members, you got 5 members. If you have 2 members or an even member, we know some families are husband and wife. You gotta vote. You gotta vote in new amendments, vote in new laws, vote on decisions. All you gotta do is vote. All the time, vote. If we have an issue, we vote. If we ever have an issue, we just vote. If we you can't come to a deadlock in a quorum, because in a quorum, you're gonna have an odd number. Simple as that. You're gonna have an odd number of people, so you're always gonna have a tiebreaker for a bad decision. For not for bad decisions, but for decisions that need to be made. So you don't make a bad decision. And then if you do make a decision, you guys can have insurance on even you all as officers. The company can have insurance on you all as officers for making mistakes. But oh no. So many people are afraid to make mistakes as the officer or manager of the entity. Ladies and gentlemen, the United States is in a bankruptcy right now. Does it look like that the politicians are managing it well? It's as simple as that. Do they look like they're managing it well? How are they managing a country that's still in bankruptcy? If that's the case, all you gotta do is mimic their behavior. Because if you're following the government, you can do it. The government's in debt. They're trillions of dollars in debt. It's a bankruptcy. They're able to operate because it's a certain style of bankruptcy. Bankruptcy nonetheless. Can a REIT operate in bankruptcy? Ladies and gentlemen, do y'all know Fortune 500 companies operate in bankruptcies and the CEOs get bonuses still? So once again, is the president getting paid? Country's still in bankruptcy. Are the politicians in DC getting paid? Yeah, country's still in bankruptcy. It's that simple. They're getting paid in politics, but the country's trillions of dollars in debt. Because that's business. That's not personal. They don't own the country. The people do, through a democratic, decentralized government. There's multiple branches. It's not one person rules all. It's not one party rules all. It's a group. It's a family. They're holding shares. They're holding what's called a seat. Maybe you all make the trustees buy into being a trustee, but still go out and sell shares for the for the trust for the beneficiaries. And here's another thing: there's actually a new accredited investor rule that came out about a year or two ago, 2020, 2021 for sure, 2020 for sure, somewhere around there, 2019, 2020, 2021. You look into those years where investing without unaccredited investors' money. So that means, somebody's putting up 80K, 60K, 50K. They're putting it into a real estate investment trust. They're doing it in an LLC. They're doing it in a C corp. But the trustees were raising money through through a placement account, through some type of contract. They were raising money. And so the SEC, you all can go look it up. It's dealing with the accredited investor rule, which is basically just saying that you can only have a certain number of investors in these type of situations that are not disclosed. So when you get to a certain number, we think it's 34, 35. You guys can check that number. Remember, it's not legal advice or financial advice, so you guys can go look up that number: 34, 35 unaccredited investors that are able to risk substantial funds. I mean, substantial funds could be $20,000. Substantial funds could be $50,000. Substantial funds could be $100,000. So having people come to you with that level of trust and putting it in a contract is very, very powerful. Um, and by them being in that type of position, remember, because they may be unaccredited investors, and you guys can go look up the definition of an unaccredited investor because they've updated it. Um, and when you deal with private placement accounts, when you deal with these REITs or these real estate investment trusts, when you deal with these LLCs that are doing group projects, when you're dealing with the corporations that families use to invest in property. And when we say families, we're talking about multiple families. It could be father, son, daughter, father, mother, daughter, son. It could be a bunch of cousins working together. Generally, what they're doing is they may be using these type of entities, LLCs, C corp, trust, whatever it is, and in turn, they can set up these type of parameters that they buy into a specific position, whether it's trusteeship, whether it is a investor position as far as a beneficiary. But the long story short is we did our best in this episode to give you as much food for thought. So when you're going into the situation, you can't say, "Well, I don't know where to start." You have some preliminary based thought process. What structure are you going to go into? What are the rules going to be? You guys set those rules. You can always vote those rules in, vote those rules out. It's a really simple sit down for an hour or two or successive planning and just say, how are we going to make sure that the successors follow suit? Not only that, how are we going to behave? Just writing out codicils, writing small lines of rules and laws that have to be followed as trustees. And so when we see that, it's very, very powerful because we have seen quite a few families step up to the plate and work together. We've had families that are under 30 years old come in trustee training and they are acquiring real estate, and it was one brother, three sisters that were acquiring real estate. They were all under 32, 34 for sure at that time, and they were focused on acquiring real estate. They had a group. It was literally one brother and three sisters, and they all had various different interests, but they also were all working together in R.E.I.T for sure. And you all can do that as well. So we do work with families, multiple families. We do work with friends that are looking to work together in investing and things of that nature, but doing it from more of a business perspective, not doing it as all as a sole prop, or people don't feel comfortable with the contracts. Everybody wants to feel comfortable with the contract. Everybody wants to feel comfortable with the investment. So it's very, very important to make sure that you have those contracts spelled out in the beginning. People say, well, do I need to go to the lawyer to get it all set up first? First thing you want to do is the people that are going to be involved with the management, selling the vision, managing it, they need to have the utmost confidence first. So the way that you get that is by making sure that we're all clear about what is it that we're doing. Period. We want to be clear about that, and we want to have clear-cut consequences if we don't do those things. And so once we see what is it that we're supposed to be doing with the consequences, then we can go out and find those investors, let them know, hey, look, this is what we're supposed to be doing, and if we don't do this, this is our consequence. And that's the same thing for the investors. You're not giving an investor a guarantee, but you are letting them know, hey, look, this is what we're going to do with the money. Is it a possible chance we could lose the money? Yes, but you're still giving them the rules up front so they can have the utmost confidence when they're investing in you. A lot of times people say in REITs, are they investing in the property or are they investing in the person? A lot of times people say, are asset people investing in the asset manager or are they investing in the asset itself? And it's a double-edged sword because you're dealing with the asset manager that's managing the assets, and then you're dealing with the asset that just fluctuates with the market. So, we always say business address, business telephone number, make it real, make real estate real. Make sure that the business is in a proper position. Once it's in a proper position, then you can go out and operate. Um, and feel free to, hey, the people that are investors feel good, and the people that are managing it, they're clear about their responsibilities and what is it that they have to do as managers. That they're not just to sit on assets; they're actually there to grow the assets. So it's always a symbiotic and well-received relationship with the vault and trustees that go through the trustee training program. And we just look forward to hearing from you all. Feel free to like, subscribe, and feel free to reach out, Christian@trustchristian.com. If you guys are looking to do group projects, if you're looking to do family/group real estate investing equals a real estate investment trust, a REIT, you can do those things very easily. A lot of times people are very hesitant because of personal reasons. But remember, everybody doesn't have to bring money to the table in the REIT. Sometimes some people can bring experience. Sometimes people can bring different skill sets to the table. So some people may say, well, I don't have all the money. That doesn't mean you can't go to somebody with the money and let them know what is that you're doing. Just because you don't have the money personally doesn't mean you can't do it. Just because someone around you doesn't have the money doesn't mean they can't do it. We all bring something to the table. That's the best part about a REIT. That's the best part about doing a family, group, real estate investing project, is that you can do that in a manner in which it facilitates everybody benefiting. It's a win-win situation. Either they're going to come in as a manager, as a trustee. Can they come in as something lower than a trustee and still be involved on the management side, but not get access to voting, not get access to financial records, but they're still there to help so they can earn their keep? Yes. You don't get creative in creating that trust, you get creative in it. You don't get creative creating that LLC. You get creative in it. You don't get creative in creating a corp. You get creative in it. You create the rules, codicils, things that you want to adhere to with the other members. You go to a lawyer. The lawyer's going to put that in a nice, eloquent document for the local state that you're in. Because if you're acquiring real estate in that state, you need a local real estate lawyer. And if you're acquiring it abroad, you need an attorney that can handle the real estate investment trust in that area. Because remember, the real estate investment trust can be public or private. So are you doing it from that perspective? Where if you're doing it from the public perspective, it's a little bit easier. Private perspective, definitely a little bit more challenging. But in the public perspective, I mean, people got to see that there's a public REIT anyways. They're going to see that it's a public REIT. So they're really happy. And a lot of people are very favorable with lending and selling to a REIT. It's the stigma behind a REIT. It's the reputation behind a REIT. It's the reputation. People are very comfortable with that. They're very comfortable with REITs. They have good reputations. So, just feel free to reach out, Christian@trustchristian.com. Look forward to hearing from you at the vault. Trustee training. We got our next workshop coming up. We've been having people ask us for the next trustee training workshop for months now. So we're gonna hop on it. Be patient with us. We did our first one in May. We just try to give our trustees enough time to plan out the trip, and we're looking for a great location. Obviously, we're still exiting the pandemic. We're always pushing the limit at the vault. We do face-to-face workshops, so the investors, the trustees, they want to meet, they want to shake hands, they want to feel comfortable with each other. That's how investing in business gets done. So for that reason, we gotta make sure that we facilitate the face-to-face environment. We are working on doing our next workshop. We know it's going to be sold out once again, lights out, like it has been before. We're looking to bring in some new people. We're actually going to be having it more catered towards some real estate investment trust thought process as a group for trustees that are going through the trustee training program. Always important. And then on the back end of that, just going over private family banking from the REIT, because once you have real estate, you're pretty much in banking. The land is a bank. If you're in real estate, real land, real estate, you're in banking. Period. And it's unfortunate that so many people don't know about that. So we do have senior trustees, senior mentors that are going to come in at the next workshop, and we're just going to give it lights out. Bottom line, we're going to give it lights out. We're going to make it a point to make sure our trustees are walking away fed and full, and we always do. But just be prepared. It's not going to be the same thing every workshop. So I know a lot of people say, oh, well, is it the same as the last one? It's never going to be the same. We got trustees that are evolving. We have trustees that are growing with the vault. We have trustees that are coming in with different needs. So we have to tailor it to each group of trustees each time they go around. Is it rather difficult? Yes, but it's a challenge that we're willing to take on, because when you get families in a room that have money, they work together. People that are in trust deal with people in trust. When you have groups of people, when you have families that are sitting in the room working together that are in trust, they work with people in trust. So we appreciate everybody that tunes into the vault, that's come to the workshops, listening live, listening to replay. Feel free to reach out, Christian at trustchristian.com. Get on the email list. Working on the next workshop. Definitely going to have the next workshop in the next 2 months. So feel free to reach out, Christian at trustchristian.com. Get on the email list. And just really excited to help you, group, or family, really do your investing together. Business is a team sport. Investing is a team sport. And having a coach, mentor, working with you all throughout that process, and providing resources in the community at the vault. That's something that we aim to do. Look forward to hearing from you all. Reach out, Christian at trustchristian.com. Once again, email over, Christian at trustchristian.com. Look forward to hearing from you. If you didn't hear anything properly, everything's inside of the description of the episode. Look forward to hearing from you all. Peace. Enjoy.